is a building that will look nothing like it looks right now when we finish. We're on just under 5 acres of property that we've just finished purchasing, which is going to give us the ability to have a state-of-the-art studio. And in that studio, something I've wanted to have for a long time, which is a live studio audience. It's going to be a 500-seat building when we finish with it that'll give us the ability to touch the world with our broadcast. This facility is going to give me the ability to do what I've really missed, which is having you in the audience to minister to personally. Obviously, you can't beat the reach of digital media. We touch the whole world every day, but we have the ability now with this to lay hands on people, pray for people that are sick, a place where you can bring people that are drug addicted, demonized, and really give them the ministry that you can't get on YouTube and Facebook. I can't wait. And then beyond that, we're going to announce the launch of Revival Today Church. We're going to hold Holy Ghost church services every Sunday morning. I'll be there most Sunday mornings. This isn't going to be like some little side project. We're going to give you and your family a place you can go that's a soul-winning church that values the presence of God, where you can get prayed for and ministered to, where there's not a critical race theory lecture or a mask and social distancing 10 minutes of no talking to anybody in the lobby. None of that. We're going to have a place where you're free and where you're free to experience the presence of God.
I'm incredibly excited because I know a lot of you have been asking about different meetings and events that we couldn't have during COVID, and trust me, we tried so hard. So this really frees us up to do everything that we want to do with healing meetings and women's conferences. So I am so looking forward to seeing you and having you be a part of this.
So I want to give you a twofold call to action. Number one, if your church turned in to a liberal nightmare in 2020 and you need a place to go, I would be happy to have you at our church. Number two, if you are a partner or a friend of our ministry, Revival Today, this is the biggest move by far we've ever made. By the time we finish remodeling that building, the acquiring of the property, you're looking at a couple of M's. So if you would stand with us now, I'll say thank you ahead of time. Pray and ask the Holy Ghost what He would have you to do. You've been so generous, and I thank you ahead of time for your extreme generosity. I know I speak on behalf of my wife, everybody here at Revival Today, when I say we love you very much. And now I can say I look forward to seeing you face to face here at the new home of Revival Today.
Hey.
Hey, Toby, you suck!
Good morning, everybody. Welcome to Check the Market. Ivana, Holly, Christophoros, Naveed. How's it going? Stock Market Samurai, Ninja, Gerald. Good morning. He's got to place down his trades for the day. That is true. The market does open in 30 seconds. Ashley, good morning. Weingartner Preserve, hello to you. I saw somebody from Italy was on, so welcome to all my fellow Europeans. Frank Thompson from Naperville, Illinois. Giovanna, good morning. Letitia, markets are open. Let's take a look. Numanize is on. Good morning to you. Welcome to Check the Market. When I checked earlier, it was trading down a little bit. The futures were. Let's see where they're at. Still down a little bit. Zoom took a beating. Let's see where they're at. Glad I got out of that one. Zoom. They're down 15% today. So there might be a good buying opportunity for Zoom coming up soon. Nathan, bonjour to you. Bonjour. Michael Frost, good morning. Got some good stuff today. PayPal is becoming the new Robinhood. India, their GDP is, their growth is incredible. And the expansion of the digital Chinese Yuan. Good morning from North Carolina. I hope it's sunny there. It's a little bit cloudy here today. It does make for a very great drive into work. I like it when the sun is beaming down. All right, let's get into it this morning. Oh my goodness. Zoom shares plummet in after-hours trading despite beating earnings expectations. Let's see the article. Video communications giant Zoom reported its fiscal second quarter 2022 earnings after the bell on Monday, beating analysts' expectations on the top and bottom line. But the company's growth has slowed as businesses and schools reopen. The company's stocks was down over 10% in after-hours trading and now down 16%, more than 16, heading towards 17%. Here are some of the most important numbers from the report compared to what Wall Street expected of the company. Revenue, $1.02 billion versus $990 million. Earnings per share also beat over 20 cents. Continue. The company also issued guidance for the third quarter that fell just below expectations, with guidance of revenue between $1.015 billion and $1.020 billion, and earnings per share between 1.07 and 1.08. Analysts polled by Refinitiv had predicted 1.013 billion in revenue and earnings per share of 1.09. Zoom has been the epitome of the coronavirus growth stocks. The company's video communication software served as a lifeline for students learning remotely and businesses trying to stay in touch with customers and employees amid a global pandemic. It has also provided everyday people around the world with the means to see family and friends, earning it the distinction of Yahoo Finance's Company of the Year in 2020. Continue. User growth exploded for Zoom throughout the pandemic, with the number of customers with 10 or more employees skyrocketing 458% from 66,300 in fiscal quarter 20 to 370,000 during this company's fiscal second quarter. That growth slowed in quarter two to 36%, with the company reporting 504,900 such customers. Customers paying more than $100,000 in the trailing 12 months, though, continues to grow. The number of such customers shot up 112% from 466 to 988. Man, $100,000 for Zoom. Phew. So there you have it. They're not happy with Zoom, so there might be a buying opportunity there soon. We'll keep an eye on it. Next. Google, Apple hit by first law threatening dominance over App Store payments. Let's see it. Google and Apple will have to open their app stores to alternative payment systems in South Korea, threatening their lucrative commissions on digital sales. A bill passed Tuesday by South Korea's National Assembly is the first in the world to dent the tech giant's dominance over how apps on their platforms sell their digital goods. It'll become law once signed by President Moon Jae-in, whose party strongly endorsed the legislation. The law amends South Korea's Telecommunication Business Act to prevent large app market operators from requiring the use of their in-app purchasing systems. It also bans operators from unreasonably delaying the approval of apps or deleting them from the marketplace. Provisions meant to head off retaliation against app makers. So that's good news for consumers, good news for app makers, bad news for tech giants. They charge a lot of money for those to use their platforms. 30%, 40%, it's crazy. Continue. Companies that fail to comply would be fined up to 3% of their South Korea revenue by the Korea Communications Commission, the country's media regulator. The law will be referenced by regulators in other places such as the European Union and the US that also are scrutinizing global tech companies, said Yoo Byung-jun, a professor of business at Seoul National University who researches digital commerce. Korea's decision reflects a broader trend to step up regulation of technology platform businesses, which have been criticized for having too much power. Continue. After a committee decision in late August that pushed the bill to the final vote of the National Assembly, Apple said it was concerned that users who purchase digital goods through other payment systems will be at greater risk of fraud and privacy violations. Okay. At Alphabet, Google Wilson White, Senior Director of Public Policy, said the rushed process hasn't allowed for enough analysis of the negative impact of this legislation on Korean consumers and app developers. Okay. The bill, which in Korean has been nicknamed the Google Power Abuse Prevention Law by some lawmakers and media, was welcomed by groups representing South Korea's internet technology companies and startups, as well as local content developers and app makers. So they're just sad. Apple and Google are sad. Thanks, Charles, for tuning in to check the market instead of watching Stu Varney. Man, that makes me happy. Thank you. Continue. This is a significant step forward for the creation of a fairer app ecosystem, said this guy from the Korea Internet Corporation Association. Google Play Store accounted for 75% of mobile app downloads globally in the second quarter. Apple accounted for 65% of App Store consumer spending on in-app purchases and subscriptions during the same quarter, according to App Annie, a mobile app analytics firm. The companies don't break out their own App Store revenue in South Korea, but it's likely a small fraction of the total. Globally, services, including the App Store, generated $53.8 billion of Apple's $274 billion in revenue. So that's a large chunk. In its last fiscal year, Google parent Alphabet reported $182.5 billion revenue last year, of which Google other revenue, including Google Play Store sales, accounted for $21.7 billion. So, not too good of news, especially if that starts spreading into the US and Europe. That won't be very good news for Apple and Google for their revenue from app stores. Next. Cathie Wood has bought Komatsu almost every day since mid-August. Komatsu has been on my watch list. I haven't shared it here on Check the Market yet, just because it's an over-the-counter stock. It's a pink sheet stock, so you can't trade it on Robinhood. You have to get it on TD Ameritrade or one of the others, E-Trade, whatever. But I thought that this was interesting, so I thought I'd share it with you and let you know that Komatsu is on the watch list. Desiree from Tulsa, welcome to Check the Market. And Eric, I agree. Money, gold, XRP, yes. Absolutely. Let's see the article. Cathie Wood has been increasing her stake in the Japanese construction machinery bellwether Komatsu almost every day since the middle of this month. Wood's ARC Autonomous Technology and Robotics ETF, which has also been on our list, bought American depository receipts of the excavator maker in most trading sessions since August 17th, after selling some of the stock in May, according to ARC Investment Management daily trading data compiled by Bloomberg. ARC's move into the company comes with the stock down more than 20% from its year-to-date high in March, even as earnings upgrades continued and as the U.S. moves closer to passing the $550 billion bipartisan infrastructure bill. Komatsu gets about 37% of its revenue from the Americas. ARQ now holds more than 2.9 million depository receipts of Komatsu, according to ARC's website, worth more than $70 million. Continue. Good morning, Doug and Samuel. Robinhood extends slump on payment for order flow ban fears. Let's see where they're trading at right now. They're back up. We're down almost 3.5%, over 3.5%. It's now up 0.61%, but it's still down about 9% for the week. Robinhood markets continue to slide in pre-market trading after U.S. Securities and Exchange Commission Chairman Gary Gensler, one of our favorite people here on the show, said a full ban
Hi there,
on payment.
non-binary dad.
Full ban on payment for order flow is on the table. Robinhood fell about 3.3% in early trading Tuesday after Gensler told Barron's the day before that paying for order flow, where brokerages send customer orders to trading firms and receive payments in return, has an inherent conflict of interest. Gensler has previously made similar points about the practice, which has been in Washington's crosshairs for months as policymakers scrutinize the mechanics of retail trading. In the wake of the run-up in meme stocks like GameStop, still any mention of an outright ban can rattle investors, in part because payment for order flow makes up a significant share of Robinhood's revenue. The company brought in about 80% of its second quarter revenue from payments for its customers' stock, options, and cryptocurrency transactions. So they're really putting the screws to Robinhood here, the SEC. Continue. Brokers like Robinhood profit by selling trades, prompting some lawmakers to question whether that encourages firms to push clients to engage in excessive buying and selling. What's wrong with that? More profit for the stonks. In the Monday interview with the online news publication, Gensler said it allows market makers to get a first look at transactions data that may lead to unfair advantages. Gensler has also previously pointed out that countries, including the UK, have already prohibited payment for order flow. Some in the financial industry have questions whether the SEC would need additional authority from Congress to ban the practice outright. Jared Seiberg, a policy analyst at Cohen Inc., said that it would be difficult to make any big changes to the system. Gensler has other priorities, and he's unlikely to move directly against payment order flow given the complexity of the issue and the complicated politics that surround payment for order flow. He'll also have an army of Gen Zs and millennials from Wall Street Bets coming to rescue Robinhood and the gamification. That's where all their chicken tendies are coming from. Continue. China's economy under pressure as factory activity slows in August. Services contract. Uh-oh. Not good news coming out of China here the past couple of weeks. Let's see the article. China businesses and the broader economy came under increasing pressure in August as factory activity expanded at a slower pace, while the services sector slumped into contraction, raising the likelihood of more near-term policy support to boost growth. The world's second biggest economy staged an impressive recovery from a coronavirus-battered slump, but momentum has weakened recently due to domestic COVID-19 outbreaks, high raw material prices, slowing exports, tighter measures to tame hot property prices, and the campaign to reduce carbon emissions. The official Manufacturing Purchase Managers Index fell to 50.1 in August from 50.4 in July. Data from the National Bureau of Statistics showed Tuesday, holding just above the 50-point mark that separates growth from contraction. Analysts polled by Reuters had expected it to slip to 50.2. So it's 50.1, almost a contraction, but more people are buying goods from other countries because the ones from China are becoming so expensive. So it's better. It's actually good news for people, for manufacturers in the US with shipping costs the way they are. Worse than expected August PMIs add conviction to our view that the growth slowdown in the second half could be quite notable. We expect Beijing to maintain its policy combination of targeted tightening for a few sectors, especially the property sector and high-polluting industries, complemented by universal easing for the rest of the economy. So there you have it. Service sector is down too. Continue with that article. That's it.
Get your money, man. Life goes on.
I'm hopeful. Yes, I am hopeful for today. Take this music and use it.
Yep, that's me every day. You know what? I'm not going to check today. And then I check it 70 times. Even on the weekends, my cryptocurrency portfolios. You know what? I'm just going to relax today. And then I keep checking it every 15 minutes. Next. PayPal exploring stock trading platform for US users. Man, PayPal getting in the stonks game. They want to get their tendies too. Let's see it. Shares of PayPal holdings jumped on Monday after a report that it's exploring ways to let its US customers trade individual stocks on its platform. The payment companies also hired brokerage industry veteran Rich Hagan, citing two sources familiar with the matter. Hagan is the chief executive officer of Invest at PayPal, as well as the co-founder and former president of brokerage Ally Invest, according to his LinkedIn page. PayPal did not immediately respond to a Reuters request for comment. The company has 400 million accounts and launched cryptocurrency trading in the US earlier in the year. In a February presentation, PayPal said its total addressable market, including bill payment, government payments, and asset trading, was 110 trillion. Man, that's a nice chunk of change. Continue. Retail trading has ballooned in the past 5 years as online platforms have gained users and fees have disappeared. Charles Schwab Corp estimates that investable wealth in the United States, including funds and defined contribution plans, retail wealth management, and bank deposits, exceeds 50 trillion. PayPal shares spiked higher and closed up nearly 4%. PayPal, let's see where they at. Up about 0.25% at this point. Bloomberg separately reported that PayPal is considering bids from companies including Apex Fintech and DriveWealth, citing people familiar with the matter. Apex and DriveWealth were not immediately available for comment. Robinhood Markets, whose fee-free smartphone stock trading app is widely used by retail investors, extended an earlier decline. All right, next. Eurozone inflation hits 10-year high ahead of key central bank meeting. Let's see it. Inflation in the Eurozone rose again in August ahead of a closely watched European Central Bank meeting in just over a week's time. Consumer prices increased by 3% this month from a year ago, according to preliminary estimates published Tuesday, after rising 2.2% in July. If the August figure is confirmed in a few weeks' time, it would represent the highest inflation reading for 10 years. This comes after Germany reported on Monday its highest consumer prices since 2008, with a headline inflation rate of 3.4% in August. France also reported its highest inflation rate in nearly 3 years on Tuesday. Eurozone households have accumulated substantial excess savings during lockdowns. Salomon Fiedler, economist at Berenberg, said in a note on Tuesday, adding that should they decide to spend a larger than expected portion on consumption soon, price pressures could rise further in the near term. Continue. The ECB, due to meet again September 9th, is expected to discuss the future of its asset purchase program, as its governing council seems divided about when to start relaxing stimulus measures. Speaking on Monday, France's central bank governor François Villeroy de Gallau said the ECB should take into consideration the recent economic recovery when discussing what to do with its COVID stimulus package. Meanwhile, Finnish central bank governor Olli Rehn said in an interview with Politico last week that the central bank needs to be cautious about withdrawing stimulus. Minutes from the ECB's last meeting showed that some members believed the bank's stance was underestimating the risk of higher inflation. So this is going to be interesting. We'll keep an eye on it because it might correlate to what the Fed is going to be doing in the United States. Continue. The ECB's mandate is to achieve 2% headline inflation over the medium term. Its own forecasts are currently projecting a spike in inflation this year to 1.9% due to what they describe as temporary factors, before falling to 1.5 and 1.4% in 22 and 23. But Berenberg's Fiedler said the ECB will have to revise its estimates upwards. Inflation in the Eurozone. Next. The Fed now risks too slow taper after too fast in 2013, Rajan says. Let's see the article. One of the leading global critics of the Federal Reserve's 2013 taper tantrum episode is now worried that the central bank could fall behind the curve as it gradually removes COVID-era monetary stimulus. The Fed thinks it has time to slow walk the tightening process, especially given the longer-term disinflationary forces like aging, automation, and globalization. Raghuram Rajan said in an interview with Bloomberg's television Kathleen Hayes on Tuesday morning. But compared to the aftermath of the global financial crisis, there's one big difference post-pandemic, which is the enormous amount of fiscal spending, said the University of Chicago economist and former governor of the Reserve Bank of India. Continue. My worry is that if they don't fully account for these new forces, they may be behind the curve, and that may, as everyone says, necessitate stronger tightening down the line. Rajan's tenure as RBI chief from 2013-2016 coincided with the Fed's rocky removal of accommodation, which hit emerging markets especially hard as currency volatility spiked and foreign investors pulled out money. This time around, as Fed Chair Jerome Powell continues to emphasize a gradual pace of tapering, emerging markets still worry about an abrupt change in stance, while they also have much less room to wait and watch than the Fed, given they have less credibility in policy space. Rajan's warning that the greater danger for the global economy is the Fed tightening too slowly and having to make up for it with more destabilizing pace later echoes other high-profile economists like former U.S. Treasury Secretary Larry Summers. The Fed needs to step up their tapering, because what they're going to keep saying is, oh, it's temporary, it's temporary, it's temporary, and is it still going to be temporary 3 years from now? They need to watch and take out the stimulus sooner than later, but they're probably waiting for the 2022 elections before they do that. Continue. Resilient demand keeps India on track to world's fastest growth. GDP grew 20.1% in June quarter, 9.2% expansion seen for the year. That's incredible growth. Let's see the article. The economic toll from a deadly second wave of COVID-19 outbreak in India last quarter wasn't as bad as feared, with the nation still very much on track to achieving the world's fastest growth this year. The first signs of it appeared in the economy's fiscal first quarter numbers published by the Statistics Ministry Tuesday, which showed a gross domestic product advancing 20.1% in the 3 months to June from a year ago. That was in line with the median forecast for a 21% expansion in a Bloomberg survey of 45 economists. Data also showed demand remained resilient in the economy, with private consumption continuing to account for 55% of growth year on year. The rupee completed its biggest monthly gain since May before the data was released, while stock indexes hit a new high amid optimism about the economy's strong recovery. Bonds were up slightly. Continue. Better than expected manufacturing performance and a milder hit to services combined with a robust pace of vaccinations also helped keep the annual growth outlook for the economy steady at 9.2%. According to a Bloomberg survey, that pace will be the quickest among major economies, surpassing China's 8.5%. The economic damage appears to be less than previously expected. With the second outbreak brought under control, a rapid recovery appears underway. Continue. Latest high-frequency indicators have shown the impact of pandemic restrictions were less severe than last year, enabling demand to recover quickly in the consumption-driven economy. Loans for consumer durables and vehicle purchases well to real estate and small businesses grew in July. So India doing very well there. 9.5%. Continue. And continue. IRS. Always looking for those gains. Continue. China's digital yuan experiment expands to insurance and fund management. So we've talked about this digital yuan before. It's pretty crazy. They actually have a feature that they put into it where they can have the money expire out of your wallet, out of your digital wallet, so that you have to spend it in case of, you know, economic troubles in the country where they need more spending to stimulate the economy. They can do that. I thought that was, I mean, that's pretty crazy, making people's money expire in their wallets. So the state-owned banks are exploring the use of the central bank digital currency in higher value payments. Let's see the article. State-owned banks are exploring the use of the central bank's digital currency in higher value payments. China's State-owned Bank of Communications and China Construction Bank are discussing how the country's central bank digital currency could be used to buy investment funds and insurance, the South China Morning Post reported Tuesday. The talks may lead to the currency finding an use outside the daily low-value payments originally envisaged for the program. Of course, they're going to roll this out countrywide and they're going to get rid of cash, guaranteed. Continue. For investments, China Construction Bank is working with Shanghai. That company, the newspaper said, citing the bank's earnings report. JC.com is also involved. BOCOM is looking at the CBDC's uses, including insurance. Executive Vice President Qian Bin said at an earnings briefing on Friday, according to the SCMP. Qian did not identify its partners in the project. So far, the currency's uses have included subway journeys and wages in the construction industry. It also planned to be used in the Winter Olympics hosted by Beijing next year. So they're going to get all the visitors and all the Olympians and everybody else to get a digital yuan wallet. So that way it can be used outside of China. Continue. Hopefully they don't make the Chinese yuan on uphold expire. I didn't even know they had it on there. As a currency. Oh yeah, they do. Interesting. It would probably have to be the digital yuan though. Karen, it was definitely awesome what Glenn Beck did. He did a great job. Yeah, I think that what we're seeing in China with the digital yuan, Doug, is definitely something that, you know, we've even seen it in Europe during the Eurozone crisis, where they everybody who had above a certain amount in their savings account, that money was taken by the government as, you know, to stimulate the economy. And I believe in Cyprus it was where they did that. And in Greece they were talking about doing it as well. Yeah, exactly. Get the wallet, then we expire your money. That's the only way they can keep the growth at the level where China wants to, because they're becoming a nation where the growth that they've seen over the past 20 years, over the past 10 years, is no longer sustainable, and it's dropping every year. All right, let's see that last article real quick. Venture capitalist Bill Gurley prefers Ethereum to Bitcoin, takes a personal position in Ethereum. Let's see the article. Bill Gurley, a general partner at Benchmark, a Silicon Valley venture capital firm in San Francisco, shared his view on cryptocurrency in an interview with Bloomberg. He began by admitting that he is late getting into crypto because he was focusing on direct listings and did not spend much time on the subject until April this year, when he dedicated quite a bit of time to reading about cryptocurrencies. That's probably when I got heavily into it too. I have to say, I was swayed by the arguments of the Ethereum crowd, and so I've taken a personal position. Let's see it. Without specifying how much he invested in Ethereum, the venture capitalist emphasized that the investment was personal and not for his firm. I'm swayed by the Ethereum crowd. He reiterated the party that's involved seems to be way more pragmatic. They seem to be open to changes and are basically making several changes, which I think will bring down fees and will be very beneficial. The developer community is clearly in the Ethereum camp. The venture capitalist opined, I think there's an ESG benefit once they move to proof of stake versus Bitcoin. It seems to me to be the smarter way to play if you're going to have crypto exposure. Continue. Gurley clarified that he's not a maximalist and that he's not arguing that everyone must have crypto exposure. He also commented on the trading platform Robinhood, which recently said that more than half of its revenue came from cryptocurrency and 62% of its crypto revenue came from Dogecoin. Uh-oh. The venture capitalist said that this is not a sound business model. He doesn't know what he's talking about. It should be 100% from Dogecoin because it's going to the moon. Adding that he sees Robinhood as more of a casino than an investment platform. If you read Wall Street Bets, though, you can see why people think that. Because it's just like, oh, I YOLO'd my life savings into this one stock, and now I lost all my money and all my dad's retirement money. I thought it was in mid-September at some point, the XRP. Let's see when the XRP. August 31st, this date marks the end of the fact discovery period for the SEC, and then there's October 15th, that's when the period for it to conduct expert discovery comes to an end. So August 31st, today is when the fact discovery period for the SEC is over. And then October 15th, that's when the period for it to conduct expert discovery comes to an end. Holding XRP until $8? Absolutely. It's at $1.15 right now. It's up a little bit. XRP doing good. Let's go over these stocks to research for today. Low is AMCR. AMCR. Amcor PLC. It's a British company. Amcor produces packaging products, specialty cartons, plastic bottles, capsules for food, beverage, pharmaceutical, medical, and personal care markets. It's one of the largest packaging manufacturers in the world. It has a fairly stable stock price over the last couple of years, not too much volatility. Solid fundamentals and revenue growth, over 40% held by institutions, and it has a 3.67% dividend yield. If I were to buy this stock today, I would definitely hold it long term. But if it did get over 20% return on it, I would sell it and then get back in at a lower price. But this one I just added to my watch list, and I think I might get into it this week. Amcor, AMCR. Because even throughout the lockdowns and everything last year, it did fairly well because everybody was, buying stuff from home. So they're up at 1283 right now. Amcor PLC, AMCR. Medium risk to research for today. Weber, WEBR, outdoor cooking company, manufactures all sorts of grills related accessories including wood pellets, etc. This one I just added to my watch list to this morning. It was just listed publicly on August 5th. I think that we might not see a great entry point for a while with the summer being over. Next couple of quarters might not be stellar in terms of sales for the company, but I'll be watching earnings closely and see if I can get in at a lower price than what it's trading at right now. I really like this company and the products it produces are high quality. Weber, WEBR. Cam, if it's not guaranteed to make me rich quick, I'm not interested. I buy XRP, Justin, on Uphold. Crypto.com. I've used Crypto.com before. I've used it for news. If that's the website I'm thinking of. Nope, that's not the one I'm thinking of. I haven't looked into Crypto.com, but I can look into it and see if. I mean, they've got a ton of users and stuff. I know there's been a lot of fraud and stuff with different wallets recently, and there was another one that was hacked yesterday, and $29 million was taken from one of these. So it's very important that you make sure that you choose a good platform and wallet to trade your cryptocurrencies on. All right, high risk, NGL. NGL Energy Partners. This company engages in the crude oil and liquids logistics and water solutions business. The company's crude oil logistics segment purchases oil from producers and transports it to refineries for resale. Its water solutions segment provides services for the treatment and disposal of wastewater from oil and gas operations. This company is trading below book value at 0.51 times book value currently. It caught my attention due to the large amount of insider buying. It has had earnings misses and revenue declines as of late, so the fundamentals aren't very good for this company. But the company did just hire a new CFO. They've got a ton of insider buying, so they're working on turning things around. So I placed it on my high-risk watch list as a potential for some quick gains should they have great financial results in the next quarter. And they're trading very low. It's almost a penny stock. NGL. It was at like 180, 177. And over the past 5 years, it's down over $15. So if they can turn that company around, that might be a good stock to take a look at, put it on your watch list and research it, see if that's something. I didn't hear about that, Michael, but I'm going to look into that. The SEC is just grinding everybody's gears right now. The stocks I mentioned was low risk AMCR, Amcor PLC, Weber, WEBR for medium risk, and then NGL Energy Partners for high risk. So those are the ones. And then we've got a tip of the day. Tip of the day.
Oh, yeah.
So I was scrolling through Instagram the other day, and I saw on the stocks recommended stuff, I saw this website, quiverquant.com is what it's called, quiverquant.com. And what it has a list of all the the stock purchases that senators and House of Representative members make. It has companies and all the government contracts. So it's just like, it's a website that compiles a ton of data that you can use for stock research. And so I wanted to share that with you. That way you can take a look and see what our congressmen and senators are trading as of late. It even tracks their performance. There you go. Quiver Quantitative, quiverquant.com. So if you scroll down, it shows you Senate trading, House trading, Wikipedia page views, Wall Street bets discussions, government contracts. It shows you a whole bunch, even the corporate lobbying, like how much are these companies paying in lobbying fees. So those are some of the data sets that they have. And I thought it was very interesting, so I wanted to share that with you all and see if that could be useful to you in your trading. quiverquant.com. And if you... Oh, we've got an Instagram. Let's check the market Instagram. So it's at Let's Check the Market on Instagram. So if you want to follow that, I'm going to be posting some of the watch lists, and things like that on there. It's Let's Check the Market. So make sure you follow that. I'll be posting some watch lists, some other things, and every now and then when I come across something interesting, I might pop on and do a live too. So if you want to follow that Instagram, it's Let's Check the Market. We've got 29 followers and 0 posts, so we'll be posting on that. That way we have a place to keep you updated even on the weekends and things like that. I did get an IG. It took a lot out of me, but we finally got there. So Let's Check the Market on Instagram. Make sure you follow that. And if you'd like to partner with us here at Revival Today, everything that we do, you can do so by #donate on Facebook or texting RT to 50155, Cash App, $RTGive, Venmo at RTGive, revivaltoday.com/PayPal. You can also give cryptocurrencies. If you scan that QR code right there, accept all sorts of cryptocurrencies. I believe Doge is on that list too. We're gonna have to update that graphic. Nick, can you remind me to see if I can get an updated graphic for that? Yeah. Thank you. And then if there's cryptocurrencies that aren't on there, you can go to 412-446-2332 and give us a call. We'll help you out with the donation. Or you can send us a check to P.O. Box 7, Prosperity, Pennsylvania 15329. Revival Today, P.O. Box 7, Prosperity, Pennsylvania 15329. And then don't forget to claim your offer, which yesterday was the book. Let's do the mug today. If you haven't got your mug yet, make sure you get it. It's our Check the Market mug, and it's filled with gold. It doesn't come filled with gold though, but you can put your own gold in there, your own Bitcoins,
You must
your
be
own
new
silver,
or something, man. We
or
the
you can just
best,
drink
man.
coffee out of it. Because we all know if you make your coffee at home, you become a millionaire. So we'll send that to you. Make sure you claim your offer for your donation of any size today. Awesome. And we'll be back on with you tomorrow at 9:20. And today at 11 a.m., we got our Revival Today live broadcast with Evangelist Jonathan. And then at 4 p.m., live with Maddie Ortiz. Tonight at 10 p.m., we have Check the News. And then tune in at 7:30 for morning prayer with Evangelist Kofi. And then, like I said, 9:20 a.m., check the market. So thanks for hanging out today. You guys have a great day. Make sure you make those gains in the market. And I will see you all tomorrow.